Good morning. What's up? Welcome to the BitLab Academy daily morning stream, 10 a.m. to 11:30 a.m. Eastern time, Monday through Friday, sometimes on Saturdays as well. I just want to do a special shout out to everybody that's still here every day in this choppy market. This is how we learn. We do this together. We break down the data so we can figure out what our strategy is. Throw a 1 in chat if you're feeling good. Throw a 2 in chat if you're feeling good and looking good. Throw a 3 in chat if you're just looking good. Throw a 4 in chat if you haven't had your morning coffee yet and you need me to calm down. It's all good. We're going to be breaking down some charts today. There are some warning signs. There's some key signals, key sort of levels we should be watching. And of course, there are some things going on within the market that we should be aware of. You know, Ethereum shutting down for a little bit. U.S. Chamber of Commerce sort of calling out the SEC for unlawful activity, as well as a number of other things that are going on. So if you have not yet ever been on the stream, I can guarantee you if this is your first time, it's not going to be your last time. My name's Kellam. Welcome to the BitLab Academy daily stream. If you haven't yet, hit that like button, hit that subscribe button, and ding that bell. We're going to get this going. Before we jump in, we got our regular Friday guest in the house today, Mr. Bill Noble. He's waiting in the wings. But before we dive in there, I just want to shout out for everybody. Make sure, of course, come and follow him here at his Twitter account, which is at @crypto_noble. You can also make sure you come and follow my account, which is right here at Kellam. We like to do these. We like to call these things out because there's so many fake accounts out there for anybody that has any sort of public presence on the interwebs, as Ben says. But so we want to make sure you're following the correct accounts. And of course, if you haven't yet, make sure you come over here. We're doing our drawing today. We do it every Friday. Come and follow BitLab Academy, which is at Academy BitLab. Retweet this tweet and hit that like button right there. Heart it. Give it some love. You are entered to win. We'll be drawing at the end of the show. And of course, one of the things that we're going to do, which we have not done in about a month, so we're going to be picking 4 names, is on the, let me see if I can pull it up, on the BitLab Academy site, which if you haven't been aware of yet, hold on, BitLab, there we go. If you haven't been aware of yet, we have launched the new BitLab Academy with all the new content. We've got a lot of stuff. We've got more trading strategy stuff that's going to basically be uploaded next week. But there is a pop-up on this page that happens at some point that a lot of you have signed up for. That's the newsletter. It's a free newsletter. Basically, we're kicking that forward again this week. We've been so focused on the launch, but we're drawing the names. Everybody that enters on the pop-up for the newsletter for BitLab Academy, you join the BitLab Insiders Club, there's a huge discount in there for people that do sign up, but then also you're entered to win. We draw every Friday as well. So we're going to be drawing those names as well as those names from the BitLab Academy retweets here. So with that being said, let's just take a quick peek at the market. And this is, generally we want to just really pay attention to the key levels. We got to pull back. Is the world over? I could guarantee you it's not. Anybody that's worth their salt in trading will tell you that when we get these small pullbacks, any sort of pullback really, the bigger the pullback, the better the opportunity. So if you feel frustrated by the price action, maybe it's a good indication that you should be taking a look at what your risk tolerance is, what your risk exposure is, what your time horizon is. If you're frustrated with what the market's doing, it might be because you're out of position or don't have a strategy to dominate it. And we're going to be breaking this down. Of course, we're going to be going back and forth from some charts, of course, some discussion about what's going on. Maybe even some things which I know there's a lot of big let's call them events that have impact on markets. Whether we've talked with Bill Noble quite a bit over the last month, and he's made us aware and highlighted the impact that things in our galaxy, in our universe, that has impacts on financial markets, like the solar eclipses. And now we're got a lot of different things coming up in these next 3 or 4 days that are also sort of lining up to have an impact as well. And we'll dive into that as well, because any data point that we can see historically has had impact on markets over a period of time that we can do historical analysis on, regardless of if we believe in it or not. If the data shows that this has a strong correlation, I am going to use that as my edge, regardless of what anybody may think, because an edge is everything in markets. So with that being said, hit that like button, hit that subscribe button, ding that bell. I'm bringing up my boy, Mr. Bill Noble. How you doing, good sir? Thank you for being here again.
Hi, thanks for having me. Good to be here.
Yeah, man. How you doing? How you feeling? The market's done. We're going back to 4K, right?
It's it's amazing what a little retracement will do. Especially after you have like meme coin mania. I always joke that crypto is the only market I've ever seen that has the ability to just kind of like auto F itself. Like we press the F button by engaging in massive speculative excess. I'm not saying a meme can't be worth $1 billion, but, every meme that's $100 million market cap is not cheap. When we start doing that.
Yeah. Oh, did you participate at all in the meme coin stuff, or do you allow people to invest in what they want, but you're sitting in a little more scrupulous sort of strategy?
Well, I mean, I was pretty chill for sell in May and go away. Let's call it, I have an experimental analytical framework. You could call it R&D, almost like BitLab style, except different. So, the researcher in my lab, her name was Toby. She actually picked out Pepe.
Oh, wow.
Out of a group of coins. And, when you watch the video, she's like adamant about Pepe. And, I didn't interpret what she was saying right, but she's like, so some of these experimental methods really did pick up on like a childlike desire to play. And now I think we're moving into more of like a harvest energy, where it's like protect what you have, capital preservation, which, a lot of people don't notice, but, that is a strategy, avoiding what we call at Wall Street P&L destruction from either chop or these sort of lunge-like flushes.
Yeah, no, I hear that. One of the things we all need to realize is when you have an asset in a market that's uncertain like it is right now, it's not like we can say we have we've had 2 higher highs, 2 higher lows, and people want to think we are in a strong bull market. And we know, based on where we're at in the cycle, where we're at in the halving cycle, for instance, but also what's going on with the just economic pressures that are surrounding all markets right now. Especially, I did my Twitter Spaces last night, and I was talking with Jordan Lindsay, and I asked him his thoughts on regarding the banks. We had several bank failures in March and April, and now we're kind of that's not something that it happened and it's gone away. It's starting to sort of we're trying to decipher whether this is going to cascade into a larger thing, especially regional banks or other and more banks. And when we saw in March and April, we did see a bit of, I don't want to call it a flight of liquidity to Bitcoin, but we did see pretty good price action around that. And people wanted to immediately take that one instance and say, this is what's going to happen if banks fail. Now, on the other side, I'd love to ask you this question. If we do see, PacWest and then, so on, so forth with other banks, potentially what if Deutsche Bank there's a number of other banks out there that are, everybody's kind of on the ropes right now, other than JP Morgan somehow, right? And so do you think that if this sort of becomes more pervasive and I don't want to say lingers, but progresses further through the system, do you think that one instance of liquidity flight to Bitcoin is going to hold up? Do you think that was an instantaneous, a momentary thing, or do you think that that's going to further what you just mentioned, this basically capital management and capital protection sort of mechanism in people's psychology?
Okay, in 2008, at the institutional level, I was working at Goldman. We knew what was going to happen, but we didn't know, we didn't have all the details, right? It's obvious. People go, stream The Big Short, and they go, "Oh, that was obvious." Yeah. Not at the time.
Captain Hindsight. That's all it is.
Right. So when you look at what's happening now with bank failures, there are obvious trades, right? Like stocks should go down, bank stocks should go down, and Bitcoin should go up, right? These are $1 in Bitcoin is better than $1 in the bank, right? That's the obvious trade. Now, what happens is when you have these crises, okay, the obvious trades, because they're so crowded, you can get flushed out right before the vision of the trade comes true. The last thing you want, right? And this happened all the time in 08. Soros has a video. He's like, I knew what was going to happen, but our positions were too big and we got flushed out. And then it happened. And if I had just kept much smaller positions, I would have made, tons of money. I didn't need a big position because of the magnitude of the move. So how does that translate to crypto? Well, there's a new twist, right? Everybody knows Bitcoin should go up if the banks fail, but they've done something where they've prohibited people from short selling the distressed banks. Now, short selling isn't the thing that makes something go down. Yeah. It's a fallacy. Shorts provide a bid underneath, right? Now, all it's done is made life miserable for people who need to hedge, for people who need to protect themselves against these declines. Okay, well, all right. So they can't sell bank stocks, right? What do they you can't sell S&P. You could, but the AI revolution and the productivity increase is putting a floor underneath tech stocks and, frankly, all of S&P, just like the invention of the internet, the PC, and even electricity. Okay, so what are you going to sell? What's a legacy portfolio manager going to do? Because okay, morning meeting. Oh no, something could go down 20%. Is there anything out there in the world that goes down in 20% increments? Crypto, right? So all of a sudden,
it rallies 1,700%.
Oh, okay, right. Well, I was getting to that. So what happens is short sellers come into crypto that nobody thought that they would come into. Legacy players get short. Retail goes, oh no, it's going to 4K. And then when you have, sort of players who are not in tune with the space, all short at 22K, guess what happens when it turns? Moonshot, right? But you don't want to be in the crowd of people that get stopped out, and I'm assuming the bottom's at 22, but you never know. Sometimes these trades have to flush everyone out. It could be a wick, right? This is the myth of, oh, the trade's obvious. The trade may be obvious. The implementation is not. So yeah, you want to not only be able to grab Bitcoin, hold Bitcoin, but the most important thing is you don't want to get flushed out and mess up your head, so you can take advantage of what is obvious just as people are getting flushed out.
Yeah, and I can't remember the name of the individual. It was an Australian gentleman. Watched this great. I shared it on my Twitter this morning. Like I was up early, like 5 a.m. Got to wake up and grind, right? We got to stay. That's where we get our edge, is taking in all the data. You can't take data in 10 minutes and have a good understanding of what's going on. And this, what he said, it was talking about the specific point regarding banks and, JP Morgan, Jamie Dimon specifically saying that, the regulator should prevent short selling of banks. Well, that's not even putting a Band-Aid on a wound. That's just complete misdirection of what an issue is, one. But two, if we think about what markets really are, it's the most democratic process we could have anywhere in the world. You have buyers and sellers giving you an honest valuation of what the price is. Now, can that narrative be shifted, and can emotions, and we talk about that a lot here on the BitLab Academy channel as well, in the BitLab Academy courses. The more you're held hostage by your emotions, the less productive your portfolio is going to be in profits. Because if you're trading emotionally, then what you're doing is you're following narrative shifts that are being shaped for you, and you're buying hope and selling fear rather than buying fear and selling hope. And the markets themselves have that democratic process of, if you don't have buyers and then have sellers be allowed, then you're literally stealing freedom. You're stealing the ability to have the markets decide what the value is based on the participants in it.
Yeah. Emotion leads you to look at the things that everyone else is looking at, right? Emotion goes, oh, I'm going to get fixated on this, or I'm going to get dogmatic on this. Like, I refuse to take profits in my meme coin trade. Or I missed a meme coin trade, therefore I'm going to go in and force the issue, right? So we can say what happens when you lose control of your emotions, but in these environments, I don't know, it's easy to get dogmatic. It's easy to feel like you missed out, right? Like everybody who feels like they missed out in Pepe, right, should be thinking about, okay, well, That trade happened. We've discovered that a meme can be worth $1 billion. What can the rest of the crypto space be worth if the dollar goes lower? Like I'm in a group where we're doing commodities on the blockchain. Let's just say that our valuation is very small compared to the smallest meme coin being shilled these days. Okay. I don't want to be taking my eye off the ball, because if Bitcoin goes the way I think it's going to go, as in higher, and you actually need things like Bitcoin, Ethereum, maybe even Litecoin or transactional currencies, you don't want to miss that because you were angry, and you don't want to miss that because, you believe that just because Bitcoin went down, 10%, that it was going to go down 90%.
Yeah. So,
right?
So what do you like as it stands right now? We've got, I interviewed Will Clemente last week, and I've mentioned this a couple of times on the stream about the comment he made about Druckenmiller, one of the most legendary investors of our time, talking about, he's looking at the market, and I don't want to say, it's not that he said he's never felt more uncertain, but there doesn't feel like there's really an edge as to what direction markets can go. They're very, very, not even uncertain, but unpredictable as to what's happening right now, because we haven't had this, the global economic shutdown, and that's still lingering. We think it's past, but this is going to be affecting markets for the next 10 years or more, probably, as things, because of how it's effective, everything from supply chains to inflation to now what's our monetary policy going to be. Now, then we have the weight of the debt ceiling, which which is, it's not like this came out of nowhere. The Congress, and by the way, everybody needs to realize it's not the president either. This is the Congress's job to make a decision about what to do with the debt ceiling. So people, and I'm not saying I'm for or against Biden or for or against Trump, but we need to realize what politicians need to be held accountable for different decisions that are being made. And the Congress knew this debt ceiling issue was going to be coming up 8 months ago. And now it always comes down to the deadline, because people, I don't know, I don't even want to go down that rabbit hole, but looking at the market right now, we're seeing some really bizarre things in terms of, performance of the S&P 500 and NASDAQ as it relates to also the DXY. DXY has just been looking like we're ready for a further breakdown, and it's just been resilient, holding right about that 101 level, and just bouncing at that level. But it's if I were to trade that, it looks like it's ready to go down, but I can't put weight behind that going down, just because we have no idea what the government's going to do. Perfect example of that is, and I mentioned it yesterday on the show as well, I forget his first name, Sherman, made that comment the other day regarding crypto bros, can make hundreds of $millions out of nowhere and print coins. But, and they say, well, the U.S. government does. Well, we can do it. We're the U.S. government. We print money out of thin air. And it's like that sort of miscalculation and misappropriation of morality and squashing it here. It's bad, but we can do it because we're the U.S. government. We have no idea what the roadmap's going to be, because nothing seems to be, there's nothing to weigh it against right now. So if you're looking at, let's jump into the charts a little bit early today, and we can come back to conversation just so we can keep people engaged and looking at this. Like, what are you looking at right now if you were pulling up the DXY or any of the traditional markets? And for everybody that's sitting there waiting for the crypto content, I beg you to understand that looking into this data on the DXY and the S&P 500 and the basically traditional finance indexes and what's going on with the market will be something that helps you understand where risk is in the market in terms of risk on, risk off behavior. So I beg you to be patient through this. And we are going to dive into Bitcoin and Ethereum and some altcoins as well here in a little bit. So let's look at this.
Okay, so we're looking at PowerPoint here, right? You see DXY. Okay, so let's talk about Druckenmiller. First of all, who is Druckenmiller? He's one of the greatest hedge fund managers of all time. He does high conviction trades. In many ways, he's like the ultimate hodler. He develops a theme. He did it in U.S. equities, and he's like, let me tell you something about risk management and diversification. Not saying you should do this, but Druckenmiller's like, F that. I find a theme, I get in a position, I believe in it, I have conviction, And as long as I'm not getting stopped out, as long as it's going my way, I'm leaving it. Now, when Druckenmiller says, I have no idea what to do, this is so uncertain, what he really means is he can only find one or two high conviction trades. And in his case, the high conviction trade is short the dollar. Okay. This is actually a 3-month chart, right? A quarterly chart. This is dollar index, right? In the candle. And the blue line is commodities CRB. And in the bottom left, you have somebody saying, the Secretary of Energy says they're going to, replenish their strategic oil reserve. The administration's been basically giving away and selling all of our oil to China to keep the price of oil down, to keep gas prices down. Now, in a stroke of the unbelievable, the energy secretary, according to one of the smartest people I know in markets, says, we're at the point where we flip the switch and we hope we can buy all our oil back, right? And they're going to be doing it in June, just in time for driving season. Only the government could come up with this. Now, why am I talking about oil? You buy a chart in economics textbook, Intermarket Technical Analysis by John Murphy, maybe, and you'll get a simple relationship. Like commodities up, that's the blue line, dollar down, right? And this was, commodities down, dollar up. Now, last year was an exception because of the war. You had dollar up because of fear. You had commodities up because of war. Now, we're about to maybe experience commodities up. I mean, the U.S. government, to fill the strategic oil reserve, would have to bid oil up to 150, which has the dollar index at 80, right? And keeping in mind, Bitcoin is a commodity. It's a digital commodity. So if there's a drought or a spike in oil prices, right, I think as long as the oil price spike is not out of control, Bitcoin is a digital commodity that will rise as the dollar falls. Okay. Another little piece of information, very relevant to Bitcoin and very relevant to not getting washed out. Okay. The interest on our debt is now the size of our defense budget. And 30% of the $30 trillion we owe has to be refinanced over the next 12 months. So a credibility problem with the U.S. government is coming. Everyone's like, oh, the debt ceiling. Okay, yeah, that's a problem, right? That's a near-term catalyst. And as Powell said, no one wants to think about a world where the U.S. can't pay their bills. But that's what everyone's looking at. And of course, if everyone's looking at it, it's wrong. So the second smartest person I know in the market is basically bringing everyone's attention. By the way, this is publicly available data that says, we're going to have to borrow a bunch of money at massively higher interest rates, right? Which begs the question, can the Fed really continue to tighten? The answer is hell no, right? Because, they're going to bankrupt the government. Then you go to look at Bitcoin. All right. So we have a digital commodity that should go up as the dollar goes down, as the banking system fails, and as the government loses credibility. Now, what's going to happen before we get there? Well, I don't know. We might have a head and shoulders top. We might have people get flushed out to 22K. Or, they'll do a big fake out, right? Sometimes the obvious things don't work. You're going to make trading decisions around this neckline. If it breaks down and there's a retest and it fails, it's going lower. Do you want to be the person that sells Bitcoin before the dollar collapses, commodities and digital commodities rise, and the U.S. government finally gets what's coming to it?
Yeah,
No.
I hear that. You know what? And Army Piper, I don't know if I know you know Army Piper. You're on their show, Investing Bros.
Right.
He actually just mentioned, I didn't know this. He said, I know that China was changing some of their policies, but he said June 1st, Chinese retail can buy spot BTC and Ethereum. They have billions in savings, and this is their first chance to buy in years. Do you have any thoughts on that or awareness of that, or how are you marrying that into your equation?
Right. Well, I mean, what I want to do is in July and let it fly, right? I mean, Chinese retail, may come in. Okay. I don't know if Chinese retail can move the market if you have institutional players using crypto as a panic hedging instrument, but Chinese retail just won't buy in June. That will be like an ongoing inflows. That what people forget is, retail loves to buy as it goes higher, right? In other words, you really in crypto, you want to buy when it's at its ugliest point, but that's very difficult. So they're gonna probably buy some crypto in June, but if crypto starts rising in July, right, or even in September, these people coming in and pressing the green button in Bitcoin, will be meaningful, and also brings me to a point that we've emphasized on the show. People take the ability to see the red button and the green button and push one of them and get what they want. Okay. Yeah. Okay. If all the elephants, including Chinese retail, I mean, think about it. Chinese retail's buying. Americans have to get their money out of banks and somewhere. They don't want to pay $60 for a US silver coin, right? Chinese retail is FOMOing in, right? I mean, again, we're chasing meme coins. Okay. I don't want people to not have fun in crypto, but the extent to which all the elephants could get through the door at the same time eventually might mean you could press the green button and not get it. So meme coins could actually be a distraction. It could be good for crypto because people make money, but it could be bad for crypto because, it's a distraction from hitting the green button when you can, while you can. Because if this happens the way we think it's going to happen, where there's going to be like a, July, September, October, December, like build up for this thing to just go parabolic, do you want to miss that because you were distracted? Right? I would say the answer would be no. Don't get distracted. The other thing about distractions is, and I don't know, and I don't want this, but if this meme coin thing turns out badly, we got the impacts of a lunar eclipse. There's a once every 12-year event in Jupiter. Okay. That's of concern because the last time we had that was 2011. Back in that case, you had a debt ceiling problem. You also had Bitcoin go from 30 cents to $32 back to $2 in a matter of months in the same year. So this could be some wild stuff going on, right? You don't want to get shaken out with that kind of stuff happening. And I'm concerned that if there's kind of a all the way up, all the way down in meme coins, we're going to be hearing from Gensler in June.
Yeah. And, right? For anybody that has any questions, or maybe this is the first time you're hearing of the, whether it's on this show or anytime we've had Bill on, when we're talking about lunar events and how they can affect markets, I just want you to realize your whole life, if you speak English, you've been also Spanish, you've heard the word lunatic. And if you don't understand what that word means, it basically has to do with full moons. And when there's full moons, there tends to be higher instances of crime. There tends to be higher instances of just wild, erratic behavior. And, essentially over the course of human history, there's been an identified correlation of full moons and a change in behavior of just the space in which we live, the space, we have to realize that we're over 70% water in our bodies. And if the moon has such an impact on tides in the ocean, how could it not have an impact on even the small, even if it's a percentage difference, even of a quarter percentage difference in the way hormones or just a metabolic rate or anything within our body, how could that not also translate into what people's decisions are in markets and what decisions are from politicians, because those are people too. And so we need to look at all data available to us in conjunction with momentum and moving average and support and resistance. Sure. But these things are important. We've seen over the course, I think you said, what was it, 112 years or something for what was the previous lunar eclipse we had? There was a special one. I forget.
Right. The hybrid solar eclipse, like the one we have, only happens, I don't have the number in front of me, but I mean, these are events that are like 10, 12, 15 years apart, right? Like, I think the last time we had an eclipse set up like this was like 1987. So when you talk about these events, right, you're talking about cycles. This stuff should be easy to sell to crypto people. They're like, oh, well, there's a cycle built around the crypto halving. Well, in financial markets, in legacy, because there's such a deep history, there are a lot of other cycles. You know, there's a 10-year cycle, a 20-year cycle. I mean, I know somebody who's looking back 83 years. They just pulled it. I don't know how they got that. But, you know, 83 years ago was 1940, right? That was like a war year. 83 years before that was like the Civil War. 83 years before that was the Revolutionary War. And there was a lot of conflict around money, economics, currency. 1774 was like, the Boston Tea Party, no taxation without representation. I mean, does that sound familiar at all to people? Right? Especially when you're thinking about what they're doing in crypto or trying to do. So, history doesn't always repeat, but it does rhyme, right? So yeah, this is why you have analysts, right? This is the ultimate learning tool for people. I'm an analyst. Sometimes people like to watch live trading. Those are traders. They have a different mentality. Okay, analysts, their job is to help traders by giving them context and navigation.
Yeah, and I want to share this. You've already seen this before, I'm sure, Bill, but just to give everybody a direct visual representation, this is, and I don't use this as a signal whatsoever, but I do check in on this about once a week just to see where we're at. And what you're seeing here is just a marking of where basically full moons are and basically new moon. Is that what it's called, right? When it's no moon. And you can see there's a very strong correlation of all the full moons being basically at just preceding or right at even if it's a small relief rally, and the new moon, another dump. Full moon up, new moon down. Full moon up, new moon down. And so it's again, this is not a signal. I don't look at this and go, I'm going to short because there's a new moon. But I look at the context of where we're at, just like you would with any signal whatsoever. I really don't care what indicator package anybody uses, even if you use standard, just RSI and price action, just basic support and resistance. That's great. Figure out what your strategy is, but then figure out what other tools and what other strategies you can use to augment and just maybe give yourself a further nudge in that direction of confluence. Or if a new moon's coming up, are there other signals that are showing we're coming into a major resistance and there's weakening momentum and there's a reduction, there's a divergence on money flow, or you can use these things as an additional sort of I wouldn't call it your main weapon or your main tool belt, but it's something that helps give you that edge just to understand just on a basic level of, we have to remember market cycles aren't just the bull market, bear market floor and the bull market top on a monthly or weekly scale. We have market cycles even when we're looking at something like this. This is a market cycle, low, high, low. This is a full market cycle on a daily chart. If we broke this down, if we can even come down to 24 minutes, full market cycle right here, low, high, low. We have to remember, no matter what form of analysis we're doing, no matter what time period, to zoom out on larger time frames to understand your macro cycle, and then look at your local cycle of the time frame you're trading in. And then what I like to do is then divide it down even ones. If I'm trading on the daily, then I look at the 4 hour for the context of the setup, and I look at the 1 hour for the actual where I'm going to pull the trigger, so I can make the best long or short position in the context of the greater sort of cycle that we're in. It's back over to you now, Bill.
Cycles, right?
Yeah.
They take all different forms. Now, somebody, and just, I'm going to be honest. I mean, I'm going way deep into this because I think you were talking about Druckenmiller. The world is so bizarre that my job as an analyst is to use whatever tools I can to try to give traders, readers, viewers the best information possible. So I've just determined this year, like planetary movements, right? Which is not an easy thing to figure out. I mean, eclipses are cool because, you can do research, but, William Gann has a whole encoded novel, right? Encoded meaning he put everything he knows in there, and the code actually stretches out to the page number that certain things are written on. right? This guy studied numbers from the Bible, numbers from Egypt. I'm using like the Egyptian method to tell time. And then what I'm trying to do is I'm trying to bring this back into crypto, like in plain speak, not because I'm trying to sell you an astrology newsletter, but because I'm trying to get people to understand cycles matter, right? Right now, what matters? Well, there was a lunar eclipse on May 5th, and I don't think we felt the impact of that yet. Sometimes you can have euphoria into these things. It's out with the old, in with the new, right? In with the newest crypto, Pepe. And then when the eclipse happens, take profits. Same thing happened in April, right? That sounds like regular market talk. There's a move in Jupiter, right? There's a thing that happens in Jupiter every 12 years. It hits on May 16th. The last time it hits on May 16th, you had a stock market move on the fall of Paris. Now, that's somebody else's work. They came up with that. But you got to ask yourself, especially with banks failing, right? Like Druckenmiller's like, I can't make sense of this. Well, I'm like, well, you know what, Stan? I can, and I'm going to, right? And if I lose followers of it, well, my name is Buck, and I don't, and you can finish that, right? That's what I'm doing. I'm using that. And like you said, you look at your weekly, you look at your 2-day, right? You look at your DeMark work, right? I have that. We could have 3 or 4 more down days, in simple terms, right? You got to be careful around the 16th in simple terms, right? You don't want to get flushed out, right? You want to pay attention to cycles, but most importantly, you want to pay attention to what's working, right? That solar eclipse in April, that was really rare. Out with the old, in with the new, in an extreme way. Banks fail, Bitcoin up 100%, right? You got the hot hand, you got a hot analytical tool set, RSI's working this week, this month. What are you going to do? Go, oh, I'm not going to use that anymore? No, you're going to write it. You're going to go with it until, you have to change your methodology, because that's what markets do. You have to, if you're a technical analysis person, when I was at Goldman, when I was in Legacy, my whole technical analysis framework had to be revamped at least every 4 years, right? QE changed everything. QE was like, oh my God, how do I adjust to an algorithm Fed manipulated market? So it's about flexibility.
Let me ask you a question. Just and this, of course, everybody that's watching, what we're talking here is strategy, mindset, and the tools that are available to us. And of course, the reason we want to talk about all these things is because this is the process through which everybody investing, I don't care if it's Druckenmiller, Bill Noble, myself, Crypto Face, it doesn't matter who it is. People that are successful over time in markets have a process that, it doesn't mean they're not emotional, but they have a process of dealing with their emotions to rely on different data sets that they understand to make choices confidently and have capital protections in place. So if being aware that it very well, you could be as confident as a day is long, and the trade could go absolutely against what every data set that you have says. And so if you don't have capital protections, you will lose, and you will lose big because you know it's going to go that way. So you keep moving your stop loss. And then if you're on leverage, then you end up getting liquidated, or you get down to losing 80% of the capital in that trade. And so with that being said, I was trying to find it in here. I can't find that specific comment. Somebody asked, they said, well, they didn't ask, they made a statement. He said, I'm trying not to be emotional and dump it here to find lower prices. And I'll tell you my thoughts, and I'm curious to hear your thoughts, Bill. And that is, with me right now, I'm a net buyer. If prices go below a price point that I've made a purchase at, I am looking at this as an opportunity to, still have dry capital on the side, dry powder on the side, capital available, not being all in just because you're trying to catch a bottom. But I've deployed capital, and when prices do fall, I am identifying target areas that I am adding to my position and lowering that average, bringing my average entry down. I'm not selling, trying to get lower prices. Is that something that you're looking at similarly, or are you completely sidelines right now, waiting? What's your strategy at the moment?
Two things. Okay, the person who's asking, Should I dump it now to try to buy it back lower? The problem that that person is likely having is their position is too big, right? In other words, if you're getting long Bitcoin, all right, unless you're like a tactical day trader type of person, which is a different story. But if we're talking about somebody that wants to like swing trade it or try to hold Bitcoin or accumulate crypto, you know, if the difference between 26 and 22K has you running for the hills, your position's too small. It's okay to have a small position, right? That was the Soros lesson. Everybody thinks, oh, I got to be all in. I got to be in with the rent money. No. And sometimes the position has to be absurdly small so that these swings don't bother you. Because when the swings are over, that's when you want to jump in. Now, to your question about jumping in, people, you got an event possibly in mid-May. Gensler will be back in June. And then Chinese retail shows up as soon as it turns. So you probably got a 45-day, a 30 to 45-day window to really start to look at DCA, right? In other words, do you DCA at 26K when we're breaking the neckline of a Head and Shoulders top? Probably not. You know, DCA implies happiness when it goes down. You want to start DCA at maybe like 23 or 24 and hope on the downside it wicks down below 22, you know, assuming, you know, the downside scenario plays out, right? This is how you want to think if you want to be grabbing it and holding it for an extended period of time, right? You don't want to see, I mean, can you imagine saying to yourself in December that, you know, I puked out Bitcoin and didn't buy it back because I was afraid it was going to go down 10% when it could be trading above 100K in December?
Yeah, it's these markets, they're not designed to eat people alive, but I mean, I've made this comment before, you know, you're either predator or prey in these markets, and very, very few of us are predators. No, I mean, nobody I think that's even watched this stream is somebody that has enough capital to be a predator. You know, the predators are the people that are, you know, multi-$100 million institutions, you know, coordinate. They have the ability, whether or not they're intending to or not, to coordinate certain things and plays in the market, and they're aware of what's going on. Just like if you're doing something in your own, and they're not wrong for it. You know, I mean, everybody that's in this market, whether you have $1 or $1 billion, you're in this market to make money, and we can't be mad if somebody else is doing something to make money. Our job is to figure out each individual. And I'm happy that everybody that's here watching, hit that like button, hit that subscribe button, ding that bell, because you're here. And thank you for being here. Every one of us, our job is to figure out what we can do better to better protect our capital. We can focus on making money, sure. But if we focus more on protecting our capital, and in this case, if the US dollar is failing as hard as it has since 1971, I think the buying power is down buying power of the US dollar is down like 78%. If you really think about it, just by getting into Bitcoin, you are protecting your capital. So boom, that's step one. Step two is, okay, now that I'm in Bitcoin, how do I protect the Bitcoin that I have? Sometimes it's DCAing at certain points. Sometimes it's not. Sometimes it's identifying, okay, we're getting that something very basic. And I have this, everybody that's already in BitLab Academy, I want you all to know we have the trading strategies section is going to be uploaded here in a day or two, and we're recording a bunch more of those too. But one of the basic strategies that we have in there for, you know, people that aren't in markets all day long and you're just trying to kind of do the least but get the most out of it, use something like the 3-day or the weekly. Look at the MACD, and you can literally just look at the MACD and the 3-day or the weekly. I would advise using another indicator at minimum, but you could see just on the crossover of the momentum, you're not going to get out exactly at the top, but you're going to be getting out a hell of a lot higher than where it went towards the low. And you're cutting out all the noise throughout that entire process. Now, the more data that you're able to understand and integrate into your strategy, the better you're going to be at timing and identifying trades in a market. But, you know, at the end of the day, we need to protect our capital. And sometimes it's making money. Sometimes it's being out of the market and giving us a better opportunity to buy in with that same amount of money that we got out with at a lower price, therefore, increasing the size of our holdings. You don't always have to trade to make Bitcoin. Sometimes it's just being patient and knowing when to get in and being comfortable with taking profits. There's so few people. It's the number one pervasive issue I see with people coming into this space. It's, you might make a great trade entry, but it's so problematic for us to feel like we deserve the dollars we made. What do I mean by that? Taking profit, being willing to take profit and letting it go past, the price is still going up. But if you had a strategy in place and you're going to take profit at this level and you don't because you want it to go higher, it's that moment that you want it to go higher that it reverses. So I'd rather take profit, let it go higher, and then reverse and not capture the last 10% than have it reverse and lose 20% of the profits that I had.
Yeah, let's talk about caveman TA, right? I mean, as a caveman, would you grab your spear, run out onto a field, attack a wild animal that could take you out? You would conquer the beast and then stand there and not eat it. Be like, oh, wow, I just risked my life to kill a beast. Now I'm just going to walk away. No, you would eat it. You would pay yourself. You would take your money. So if you're not taking profits, you're not a caveman. You're not trading like, I don't know, like the superior predator. Let's go to the rotisserie chicken example. All creatures in nature are predator and prey, right? And in crypto, sometimes people can feel like prey. All right, what's the cure? Go to the grocery store, buy a rotisserie chicken, take it home, put it on a skewer, go out on your balcony, let out a polite primal yell, and eat that chicken with your bare hands. You are a predator on that chicken. Now, let me ask you something. Do you want to sell your Bitcoin to somebody aggressive enough out there who would take that chicken and eat it with their bare hands and yell? Like, do you want to sell do you want to be the person that gives your Bitcoin to the predator, or do you want to be the predator? So when you got that chicken in your hands, it's a complete mess, or you're listening to this and going, I'm out of my mind. Yeah, maybe, but I'm not selling my Bitcoin to Druckenmiller. I'm not. Right.
You could swim with the sharks. You don't have to, you may not be a shark for a while, but you could be a sucker fish and just follow their move. That's one of the biggest reasons why I'm such a fan of on-chain data, because, you can see in real time per block print, and if you have the free tools, then it'll be, 3 or 4 days delayed. But on the macro, I mean, you see, even on a 3 or 4 day delayed chart, we can see that long-term holders are still accumulating right now at these levels in droves, whereas short-term holders are selling, showing that, to me, that's giving me confidence. Even if we drop from here, that's giving me confidence in terms of the smarter money in the space that looks long-term is saying this region and below is an excellent opportunity to accumulate before, which will be another bull run. It's not going to not happen. So how do we identify that? Well, you know what, Bill, everybody's been so patient. We've been talking we're dropping gems here. Let's break down some of the charts you're looking at. We can look at Bitcoin. I'd love to talk a little bit about, we can bring up Ethereum and talk about what's going on there. We don't need to dive into the news story, but they did have the shutdown or the error with their beacon chain, I believe it was, for about 25 minutes, and had a very minimal sort of pullback, very minimal, comparatively with like Solana. But then again, we have to understand tokenomics. Ethereum's a much larger beast, a lot more liquidity, a lot more stable of an ecosystem. But yeah, let's look at some of those charts. Let's give these people what I know they want. Let's look at what you're looking at.
Okay, so this is ETH on a daily chart, right? This DeMark work, essentially these numbers like 1, 2, 3, 4, 5, 6, they help figure out what the first part of a trend is going to look like. The first part of a trend uses a quantitative method, and usually once the trend gets moving, it goes from 1 to 9. So it's now at a 6, which means ETH could have 3 more down days. There's support at 1649 and 1591. Now, if you look at the same thing in Bitcoin, which is basically like, again, how much more of this do we have to go, right? That's what people want to know. Okay, well, there's day number 6, right? You're going to go to day number 9. right into this May 16th date, right? You have support at 22. That's probably a stopping point. Just look over here. That was kind of that was where the final dump in March started from. So we're going to wind up flushing out everyone who's bought the market since March 13th. Remember how I said the consensus trades, people get washed out? Well, all these people may wind up getting washed out. And who knows? I mean, it could be stupid and wind up at 20. I don't really want to go there. I want to focus on 22. I want to focus on two things. One, if you get to 3 more down days, right? Normally when you get this 9 signal into mark work, either the downtrend or the trend should end and it should go back up like as if it were in a range, or when that signal comes in 3 days, right? Down, break, pause, end. And if it tries to rally and fails, then serious trouble's coming, right? So I had this thing on my show, beware the failed rally, and at certain points. 3 days from now, Bitcoin should stop going lower. If it rallies and fails and it's ugly, BitLab's probably got a lot of work on candlesticks so you can see what an ugly reversal would look like. Okay, when you get those ugly reversals, if you get one 3 or 4 days from now, you want to maybe clear out a little bit, right? Preserve more capital. Okay, now, of course, that would be a good thing, as you noted earlier, right? It's a good thing because if you want to do something like get involved, say, in Solana, okay, Solana's not cooperating and coming up here, but like probably the most extreme example.
Kind of like their chain. I'm just joking.
Right. I mean, it's like the most extreme example of cheering for lower prices is Total 3, right? Now, this is insane. I know it's insane, but this is Total 3, which is total crypto market cap without Bitcoin and Ethereum, right? It's everything super speculative. And this is a straight up and down parallel channel, right? Just parallel lines. And this thing's been traveling in this channel. It was up here in mid-April where you had a lot of euphoria. And I know a couple smart people who are like, well, Bitcoin could hold it together if it goes down. But you could conceivably have, altcoins retesting or taking out its old low, like a new low for the move in altcoins. Now, how do you translate this into a tactical strategy? Doing DCA in altcoins outside of Ethereum, it may not be time for that. You may want to do that in June or September. If you're holding on to altcoin positions and you feel like you're already wrecked, ask yourself what would happen if you got wrecked even more. So obviously, I hope it doesn't go down there, but this goes to this idea of your plan. In other words, is there a way for you to plan and say, all right, if something really absurd happens, I'm going to go to the cash machine, I'm going to take out $200 and I'm going to put it in a shoebox and I'm not going to touch it, right? But I'm going to pull that money out if Total 3 ever actually made a new low on a selling panic in June or a selling panic in October, then I'm coming in with my money. That's where I'm coming in, right? You don't, I don't think, want to be catching the falling knife when there's kind of nothing underneath it, right? So on one hand, don't sell your Bitcoin to a predator, right? On the other hand, don't be prey because somebody may short sell or dump altcoins in a panic or a risk-off vortex, as Druckenmiller says. Kind of tough to predict what that is. The catalysts are out there, but we don't know what it looks like, right? So if you're doing Solana, Polkadot, if you've got smaller coins, I know people are into Gala and stuff like that. Where are these things going to be trading if there was a panic move down in altcoins, and Bitcoin went to, 20 or 18? So if you're looking for altcoin charts, make sure you're looking at the total altcoin market cap, right? Just make sure you're looking at all altcoins in total, because remember, when you have uncertainty, Not every speculative asset survives. A lot of people have been talking about Bitcoin dominance, right? Everybody talks about Bitcoin dominance, right? And then meme coins come along, right? And then Bitcoin dominance didn't seem to matter as much. So I guess the good news is Bitcoin dominance made some sort of a diamond formation, right? And it either broke out of the downside or the diamond is still forming. Okay. I don't know which it is, but I do know this, right? The bigger the base, the higher in the space. Bitcoin dominance has been making a base for a really long time, a really long time. And if Bitcoin dominance breaks out on this monthly chart, it could go to 72. Well, what's the world look like with Bitcoin dominance at 72? It could be Bitcoin at its all-time high with altcoins being meh. Who's thinking about that?
Yeah,
Nobody.
no, absolutely. And it's, you know, it's, I don't want to say I'm proud, but I'm happy that, you know, we're not a Moon Boy channel or a Bear channel. We're a data channel. We talk about all the things present, you know, and I did a poll here and I did a poll here of what the Bitcoin price at the end of May, what everybody thought. 43% said less than 25K. 39% said 25 to 27K, 13% said 30K region, and only 5% said above 32K. So people are being, you know, at least on this channel, which is nice to see, a little more conservative in their viewpoints as to what's going to, as to what is likely to transpire. Could we absolutely rocket through all that? Absolutely. We could be up at 36K and shock, you know, shock all kind of things. But I think the likelihood based on the data set we have does signify that we are going to be, if I had to venture to guess, probably somewhere between $23,500 and $26,000 would be the region I think we would be at the end of May. And then going into June, I do think that there's a strong possibility of some pressure coming off the market. And does that mean altcoins are going to rally immediately? I don't think so. I think Bitcoin will probably get the ball rolling. And then maybe towards the end of June, we may see, you know, some collectively, not individual coins, but we might see the market as a whole start to press.
Right. And then, you know, speaking of like smaller altcoins, right? Like a tactical strategy, you know, I'm looking at things like AGIX. I mean, does anybody remember AI?
Oh, you know how many times they said AI in the Google, not conference, but the earnings report, or whatever their conference was, their press release. They said it so many times,
right.
176 or something.
Right.
Yeah.
And then, you know, you're looking at AGIX. I met the team. I met the thought leader. I met all these people at Consensus. Okay. And, you know, you're looking at this chart, right? This is an example of what I was telling you to prepare for in Bitcoin, right? You had, you know, you had the 9 signal, but you had the failed rally, and then the trend restarted itself. So here's the good news. You know, you're going to want to own some piece of AI somewhere. So this is not investment advice, but if somebody wants to build a decentralized AI solution, you can pick AGIX, you can pick something else. You got to ask yourself, hey man, if they cheapen this up, you know, this long-term trade, I mean, this guy from Singularity Net, he was up on the stage with Snowden for like the feature climactic conclusion of Consensus. So, I mean, if you look at a project like this and you look at the fact that people are they're just giving up, right? I mean, you don't want to be the person that gives up. You want to be the person who takes advantage of the person who gives up. So this is like the low downtick in March when these things started getting listed on exchanges. You know, this can go, you know, lower. Now, that's not good if you're holding it, but, you know, if you look at a weekly chart, you know, you're at a 5, you could have 4 more down weeks, including this one. And you're going to be like, well, Bill, is that good? Yeah, it is good. Because like the AI theme's not going away. I don't think the meme thing's going away. Question is, what's your trade location? And then, of course, there's Bitcoin itself and Ethereum. You know, do you want to be all screwed up and stopped out and wrecked when, you know, crypto rises from the ashes? I mean, why are we here? Why are you up at 5 in the morning? People who watch you should be like, why is this guy up at 5 in the morning? Well, he's up at 5 in the morning because he knows he's going to wake up one day and he's going to try to be, the Harvard of crypto, right? This is going to be where people are going to go to learn about crypto. Just like, in my day, you had to go to XYZ school to get an MBA. Why is this guy up at 5 in the morning? Because he knows one day, the whole planet's going to be at the doorstep of his website going, hi, can I learn crypto here?
Yeah. And, to your point, to bringing it back to Pepe and AI, if you want to talk about just a fundamental trade, Pepe is a meme coin based on pure speculation. And of course, there's going to be large liquidity flows into it. And then of course, out of it. But even looking at the most basic fundamental analysis of market cap, AGIX right now is ranked 105th on CoinMarketCap. And it has a usable use case and I don't want to say a proven future, but a very assured future based on everything happening in the world with AI and the integration of AI into nearly every real world business that we can think of. And not only business, lifestyle, productivity, and the list is endless. Medicine, it's anything you can think of other than maybe cutting hair, which I think still will have some form of mechanical sort of robot thing in the future. But I think it's going to be, there's going to be certain things that are going to not integrate AI, but it's so few and far between. I can't imagine not having some exposure, even if it's 1% or 3%. The fact is that there's a percentage there with the number in front of it, and have exposure to Pepe and not have exposure to things that have a real world use case is, and I can't believe I've used this word twice today, but it's the most unscrupulous sort of decision I think anybody could make when you have the opportunity to access and participate in any of these various parts of the ecosystem.
AI is going to create challenges and disruptions like the invention of electricity and the personal computer. And as you said, it's going to be so pervasive. You've got to think about two things on an investing front. One, obviously, how do I get a piece of the action, right? If it's going to eat the world, how can I make sure that I'm at the banquet table, right? The second thing is crypto is going to be an integral part of the AI world. You have to ask yourself, what would artificial intelligence use to exchange value with other people or other computers? Skynet from the Terminator movie was not a fan of global governments once it became sentient. So what is AI? What is AI going to use? And then there's another component, which no one is talking about, or maybe they are with the ordinals, but art, right? In other words, AI can make pictures on Mid-Journey, but real human art, I'm hoping live television, okay, comedy, entertainment. Yeah, AI can make movies, but there's going to be a market for art. Kai-Fu Lee writes about this in a book that he wrote in 2018. So this whole idea that NFTs are dead, yeah, maybe silly generative stuff might be, maybe, but real art isn't. Now, am I an art critic? No. But if I had the smarts and I could figure out what was real art and what wasn't, or what could be real art, hey man, that stuff's going to have value. Maybe there's an AI twist.
And you know what? With the NFT thing, I'm glad you brought that up. We don't talk about NFTs much on this channel, and I want to. I want to bring that up more. Is the fact that NFTs are by nature integrated in part of the digital asset blockchain ecosystem, just by nature of how they're run, how they're operated, and whether or not you buy into the idea of a picture of a rock being worth $1 million and selling as an NFT, or an ape, you have this, maybe whether it's closed-mindedness or just disinterest in NFTs. I hope everybody realizes that you can participate in the NFT boom by not even buying an NFT ever. Look at different chains that Polygon, for instance, or AVAX, or any of the smart contract platforms, Cardano, and these are the rails that those NFTs operate on, Ethereum as well, right? But what we need to realize, every one of us needs to realize, take the art side of it away. I think more than anything, NFTs, the art side of it, what it did was it brought it to the mainstream zeitgeist, and basically made it the awareness of just the basic concept of even the word NFT, what it is. But people really need to realize the fact that in the next, I would say 10 to 20 years, I can't imagine why we wouldn't have nearly every major document or licensing feature that we would need not be an NFT, whether it be a marriage license, a housing deed, a car deed, medical records. The fact that if I travel from New York to Georgia and I have a medical issue, and why do they need to call somebody in an antiquated, over a line, have them fax the documents or send the documents, because these should be attached to our digital identity. And if they scan my thumbprint, or whatever the seed phrase is, there's going to be protection mechanisms in that. All of that is stored within a safe, secure NFT blockchain that transmits it immediately with the correct permissions addressed there. I think California, if I'm not mistaken, on Tezos started doing car registrations as an NFT, which basically simplifies everything. Why do if I get married, do I need to go down to a county clerk for them to file a piece of paper, and then they can potentially lose it and there's an issue? No, this stuff is all going to be migrating. The whole world, in terms of how we operate with documentation and verifiable, legal documents, is going to be NFTs. And to the AI point, I had a story here. We didn't touch on it, but ChatGPT actually entered basically trading with a $50,000 portfolio and outperformed basically this strategy he had by over 400%. So this is another one. This kind of ties back into what we were talking about earlier about swimming with sharks, and the predators and the prey. This is not something that's new, and I hope people realize that. There are Wall Street institutions that compete for rental commercial real estate space for the distance in which they are from the New York Stock Exchange, so that there is a hundredth of a millisecond difference in the speed of transaction for their algorithmic trades, so that they can scoop out a trade a millionth of a nanosecond before other trades, just because of the distance and the speed. So if there's already algorithmic trading going on with human designed algorithms for those things, the future is endless, and we need to make sure that we dive into as much learning and knowledge and data as possible. And I'm thankful for you, Bill, coming on here and sharing your thoughts on a weekly basis. And I'm thankful for everybody as a selfish individual. I'm thankful for every single person that's watching this stream, because it's you all that are going to make it easier for this adoption in this space to grow. Because as you learn more, you're going to progress in your own abilities to navigate this market. And the better you do, the better beacon for the crypto ecosystem you're going to be to your friends and family. When you're doing better, they're going to say, what happened? What happened? Well, let me talk to you about Bitcoin. Well, isn't that a scam? FTX collapsed. Well, haven't some of the biggest banks in history just collapsed? Isn't the US dollar a scam? We need to have talking points, not debate points, but talking points, and also the knowledge of how to navigate these markets ourselves. So I'm thankful for everybody here sharpening their sword with us. Now hit those like buttons, hit those subscribe button, ding that bell, hit those emojis. Let's drive that engagement up. I just had to say all that. Sorry for my little pedestal there.
No, it's okay. No, I am grateful for everybody who watches, anything, or people who turn out for live streams. You have a choice in content providers, and we appreciate you guys coming and hanging out with us, right? We try to drive value, education, analytics, so that's how we show our gratitude to you. And also, as a reminder, if you see a technical analyst in a $3,000 suit, run, because a good technical analyst, a professional technical analyst, wants to help people at their core. And even guys like Tony Robbins will tell you the most important thing you can do in life is serve others.
It's ultimate gold. It really is, being able to share experiences and walk with people through their fire. When I used to run this event space here in New York, we had all kinds of people from Deepak Chopra to some of Tony Robbins' business partners. And crypto. It was everything. And there was one talk where a guy was talking about basically moving forward in your professional career. And the interesting thing about it that I really appreciated was the focus wasn't, the most of the talk wasn't about, this is what you do for your professional career. He was talking about life balance. He was talking about compassion. He was talking about giving. And then he gave this definition of compassion. And I think all of us could do better at this. It's one thing to offer help when it's solicited. And you all being here, it's not that you're asking for help, but you're here because you want to learn. So I'm happy to share. But on the flip side of it, when you're with your friends and family, it's another thing to prescribe help to them when they're not willing to listen. So in order to be compassionate and really, strengthen the relationships of those in our lives, which therefore will then, carry over into our everyday life and how we're interacting with friends, family, business partners, how we're performing when we're at our trading desk. We talk about that in the Psychology of Trading course in BitLab Academy. It's understanding that compassion is being able to sit with somebody through their fire. It's not giving them help. It's not understanding what they're going through. It's them knowing that you can sit there with them, and whether you have the answer or not, but you're willing to sit there with them through their fire. And if you have help to offer, you can offer that there may be help there. And if they want it, they'll take it. But if you prescribe things to people, it's more likely than not, people meet prescription with defensiveness, and you actually drive them further from that opportunity that they have.
Yeah, sitting with people through their fire is at the hallmark of what I did in Legacy, right? And sometimes it may be something you have to do for yourself, right? Like growth sucks, man. Yeah. Learning is painful. I mean, learning from mistakes is painful, rather, right? You got to invest the time to learn at BitLab, right? But if you got to learn by trial and error, everyone's like, oh, I had this conversation this morning. Oh, I want to grow. I want to be better. Oh, I got to go through this.
And then discipline comes in. Yeah.
Yeah. Oh, what? I got to get up and do yoga before I go online with Kelly. And, basically the yoga instructor is like, yeah, big boy, you do. Like, not optional. So I have some help with that, but that's how I'm getting through my fire, and that's what we got to do to grow. And there's no better place to grow than crypto, because you can go through euphoria and getting wrecked in the same week.
I mean, I brought that up on the Twitter Spaces the other day, that trading assets in a interesting sort of metaphorical but real way is a good sort of lens onto who you really are as a person. Are you patient? Do you have strategy? Do you have discipline? Do you have a plan? Are you able to stick to your plan? And all those things are cyclical. Having a plan and sticking to it goes back to strategy and discipline, right? But it gets highlighted. Do you react emotionally versus seeing something happen and being able to just sit in your own fire and saying, okay, I'm not going to, oh my God, I'm going to go, okay, let me crack my knuckles. Let me look at some data here. Okay, it's falling. It's coming into a zone. Okay, I don't need to be scared. I had a plan in place, and my capital management is in place because I have my stop losses or my trailing stop or whatever your capital management is. But trading really, I noticed that over the last 7 to 10 years trading myself, that it really is like a lens into your sort of subconscious of how you interact with life on a daily basis. So if you find yourself getting frustrated, maybe that's a good indication that you need to take not only a break from the desk, but you need to sit alone with yourself and look at a tree and ask yourself, as Deepak Chopra says, who am I? And then ask yourself again, but who am I? But who am I? Well, why am I here? Why am I doing this? What is the fuel for the engagement of my energy into this thing? What is driving that? And if it's family, and if it's growth, and if it's something that is not just, I'm going to make a bunch of money, focus making money more into, I'm going to make capital and assets so that I have basically a sack to pull from to give to those around me and to live an easier life and to help those around me. That's going to drive you a lot further than being driven by making 38% on every single trade that you make.
Yeah, there's nothing like doing live television, particularly when I'm in a mode where I'm doing it every day, to actually act as a reflection of what you know or what's going on inside of you as in terms of your ability to help other people. Right. Like I've gotten off streams and the market has gone exactly in the opposite direction of whatever I was saying. Like, you put those trades on and
Yeah.
as soon as the confirmation comes in, you know that you're going to lose money. Right. And then I have to start asking myself, it's like, wow, okay, well, what happened there? Did I get frustrated? Did I get emotional? Did I get caught up in the moment? I'm pro crypto. We're all pro crypto. Sometimes it's better to just be a man with or a woman with ice in your veins. But, in this business, it's not that way. Crypto actually requires an extra degree of control, right?
Yeah.
Because we believe in it, but that can distort our vision. So, if something bad happens, or if you're off, which, if you're doing live television, you can be off. Why was I off? Why did this go bad? Now, that said, sometimes you have a research framework. If you develop a framework, you got to use it. You got to stick with it. You can't change your research framework because you did a trade that lost money, right? Now, if you do 30 trades that lose money, you got to look at it. But, you want to stay at least somewhat consistent, but always curious as to be like, hey, if I did something good, what did I do that was good? It's like, did you get lucky? Or did you have something in your methodology that you checked off? Now, what really smart traders will do is, like, a lot of times they'll have a journal, right? They'll have a journal. They'll wrote down, okay, this is what I did right. This is what I did wrong. Bill Williams, a famous quantitative analyst, like one of the like OGs, had a trading school. What did the trading students have to do? They would have to wake up in the morning and they would write 3 pages of stream of consciousness. That means they would just write out whatever was in their head. They would just dump it all out. And he wouldn't let them trade unless they did that first. Okay. So is there something in your head that needs to get dumped before you trade? Or if you have bad trades, what do you need to let go of? Right.
Bill, you're dropping such fire that our fire alarm went off in my apartment here. I mean, and I appreciate it. I want everybody to really, I hope you appreciate that on this channel, we don't just do an hour and a half of charts and saying, here's the levels, because it would be like teaching somebody sitting on a couch how to pedal a bike and then expecting them to be able to go and take a huge jump. They don't know how to balance. And the core to success in these markets, in any market, and really in life, is to dive into self. And as foo-foo as this may sound, I don't care if you think that, because you need to hear it. We need to dive into ourselves so that we can, it's basically like doing you're being a mechanic. You're going in, identifying, okay, what can I improve on? There was a story I read about 4 or 5 years ago of a coach that took over a team that was like the worst rated team, and I think it was rowing for the Olympics, an Olympic team. And he basically took them from being the lowest seed all the way to getting the gold. And what he did, he wrote a whole book about it. What he did was, rather than saying, okay, we're going to get the gold, every week they focused on something that they can improve 1%. And that, if you think about that, it's the same thing with trading. We don't need to make 80 to 90 to 100% profits on every trade we make. If we can focus on being break even or at least 1% on every trade, maybe you lose 1% here and there. If you're focusing on compounding the small wins, you're able to identify the bigger wins better, because you're not taking huge swings at everything that absolutely comes out there, because you're taking a more cultured and strategic approach to what you're doing. But then this goes back to yourself as well. This is why sitting with yourself, being away from your desk, figuring out your strategy. You don't figure out your strategy, but while you're sitting there looking at a chart, what's my strategy? What's my time horizon? What am I comfortable with before sitting down? Then you sit down. Okay, let me look back at my journal. Look at all these trades that I've made at this exact same setup. This is how they went. This is where it went wrong. How can I improve 1% on each one of these steps? And you do that over time, you know, in the matter of, you know, 6 months, you've improved 222%. You know what I mean? It's in terms of self, you know, so that's really money there. Bill, do you, I really appreciate your time. I know we're going to be having to wrap up here. Do you have any final thoughts or final looks or final chart you wanted to share before we go?
Well, I think the most important thing is don't sell your...
Everybody stick around. We're going to do some Turbo TA at the end, and then we're going to do the winners for the BitLab Academy. If you come here and basically follow, retweet, and like this page, you're going to be entered to win. Do that right now. It's at Academy BitLab. We're going to be drawing that here in a second. Sorry to cut you off, Bill. I just want to make sure people got their tweets in.
No, it's okay. So don't sell your Bitcoin to a predator, right? If you do a good trade, reinforce the win, right? If you hunt, right, you get to eat. The more times you get to eat, the more times you hunt successfully, the more risk you'll be comfortable taking, right? Because we're entering an environment where you're going to have to ask yourself, what kind of risk am I willing to take, right? It's not going to be, the dawn of crypto will not be an easy trade to make. So you need to be ready to make those hard trades. And when it is, the way you get ready for that is by doing what Kelly said, get those 1% winners, get that incremental approach so your mind knows what success looks like. So when it comes time to really be brave and stand up against a saber-toothed tiger, you'll be ready.
Hallelujah to that. Bill, I appreciate you very much. Everybody watching him, you can see his name right below his beautiful face there, at @crypto_noble. I'll pull it up on Twitter here in a second as well. Bill, I appreciate you. I appreciate the discourse, and thank you for coming on basically on this weekly basis. I hope you have a wonderful weekend. I look forward to having you back on next week.
All right, sir. We'll see you next week. Thank you.
I'll see you later, brother. And now, everybody, this is what we're talking about. A mistake that makes you humble is better than an achievement that makes you arrogant. Humility allows you to grow and sit and say, maybe it wasn't them, it's these three fingers pointing back at me. Maybe I can adjust something. Now let's go ahead and break down a little bit of TA. Before we do that, just again, I want to just shout out, make sure you come over to this tweet right here. I'm putting it in the chat, retweet this. You'll be entered to win. We're going to be doing 1 month indicators and 1 month. This is for 1 month indicator and 1 month the courses. We have the brand new BitLab Academy page up right here. This is not it. It's let's go to home. Come to BitLab Academy. You can also sign up for the newsletter. You'll be entered to win as well. There's a pop-up that comes up on the screen here. We were just making some adjustments. But for anybody that does want to sign up, you'll notice up on the right hand, mine says my account because I'm currently signed in. If you used to be a member of BitLab and you're trying to get back in, sign into BitLab like you would have before. Just come up here, log in, and then go in, resubscribe. If you're not yet a member of BitLab and you're trying to be, you can click up here. There's an enroll now. You can click right there. If you just want to see some of the free content, click right here. Start your free education. Start your education for free. And you'll see there's two options. You can sign up today for free, or you can just get the all access, which has all the different courses. This is a limited Bitcoin 101, blockchain 101, self-custody. This has all the trading, technical analysis, and etc. And you can use this code right here. I'm just going to point this out to you. Where is it at? Let's throw it on the monthly. You can use this code right here. Give me 30 for 30% off your first month, or stack 30. This is good for both. You may have to do one or the other. This one's for the indicator, stack 30% off your first month. This coupon code will be expiring here very shortly. So I definitely want to recommend getting in on that. Now let's do some quick TA here. Let's go ahead and look at this. Macro, we see what's going on here. Let's get down to the 4 hour. We're going to do some Turbo TA, and then we're going to look at a couple of the altcoins as well. Now, we've lost this sort of parabolic uptrend. This was sort of a speculative level, but even if we discounted that, we've also, of course, fallen through this trend line that we've had here. We've bounced up, found resistance on it as well, confirming this line. came down, bounced on this line, and now we look like we're falling down. I do want to point out, Nick, one of our main devs for the indicators, did point out on the relative extrema, you can see these pink bars, which are showing the relative extrema has been overextended. This has shown that not only is it overextended, but let me end that. There we go. This was unhealthy sort of bullish movement, and we could have predicted by looking at this the relative extrema on the monthly that this was likely going to cool off at these levels. And we can see right here, bearish. These candles have a lack of bullish support in this region. So it kind of makes sense that we are rolling over. Not only that, we had this spinning top candle right here, which signified a likely top or a pause sort of situation, which we're seeing play out. Coming down to the 1 hour on Bitcoin, we can see that we're getting the relative extrema to the downside, greenish, is only on this downtrend showing weakness because this is only coming into a consolidation. Further down, consolidation, further down, consolidation, further down, overheated, further down, consolidation, further down. We didn't even get the relative extrema bullish here, meaning lack of bearish pressure, but we are immediately on any sort of uptick getting this bearish sort of a signal, which is these pink bars, which is indicating these bars are out of the relative extrema. And this is neutral here. This is on the 1 hour. If we look at the 24-minute, we are getting a little bit of an attempt here to hold this level. If we zoom out here, we can see, there we go. 4 hour, 2 hour. If we zoom out here, we see this high right here is sort of in line with about where we're finding support. If we're not able to hold this support at this level, and just based on this structure, I would assume anyway, that we will likely, get down to touch this area, the 24/7 to 25/2 region is what I'd be looking for a downside on Bitcoin. Now, if we continue on, let's look at Ethereum. Ethereum, similarly, very similar structure here. If this were to break down, we can see the golden pocket from this move is down here at 1690, which is also the low right here. So I'd be looking for Ethereum to probably come down into this zone, 1680 to 1690 level. If we lose this level, then we may be retesting this major trend line at 1590. Let's go ahead and let's just continue down the line. If we look at Cardano is looks like it's a bit of a falling channel here. I'm not going to do the TA because we're doing turbo TA here, but we are seeing, I can see on this relative extrema right here, these bars sticking to the upside. When these bars are sticking to the upside, remember, this is lack of bullish support to continue that uptrend, meaning there's bearish pressures coming in, not agreeing with upside action. We also have two bearish divergences on this level. If we're not able to hold this 35.2 level, which is this low right here, I do think that we may be coming to the next leg down, which would be down to the 33-cent level, just based on price action on these previous lows. Option J, the next one down would be about 31, maybe a little lower. So that's what I'm seeing on Cardano right now. If this were to move to the upside, option F, come down to the top. If this were to move to the upside, the sort of level I'd be watching is 39 cents. This is the golden pocket from this move. Coming down further, Algorand, this is just following this trend to the downside. If we're on the 2 hour, let's go to the 4 hour, boom, 4 hour. Okay, on 4 hour, let's turn on the, there we go. Yeah, we're right at this level. If we lose this level, on Algorand, then I think we may be having a little bit of price, not price discovery, but a bit lower levels to the downside. Option F, come up to the top. This move right here, we get our 1.618, which is right here at 1427, 1424. If we come down further, this may be an area, if there's any bullishness that reverses in the market, this would be a level that I'd be watching. Next, the 2.618 is all the way down here at 8.6 cents. If we go further on down, we can come off this chart. We can look at AVAX, 4 hour. This is finding resistance each time it comes to the EMA. There's no bearish divergences right now. This is neutral. This is looking a little healthier than the other ones. If we come down to the 1 hour, we can see, look at this. relative extreme of bars right here, all pink, showing this is lack of conviction on these candles. Look for a reversal. We got the reversal. So yeah, things are looking very similar across the board. That's going to have to do it for now. Somebody said Filecoin was looking like it potentially could be setting up. I'll just look at that because I did see that chat in the chat there. And now we can see with this, look, 1, 2. I like having 1 or 2 relative extreme of bars before really taking it seriously, unless you get a really, not green, but this candle way low here on the actual relative extrema. Here we got 1, 2. See 1, 2 reversal. This is 1, 2, 3. Now we're consolidating, but this is actually holding right here, and this is blue. This is looking a little stronger. If we come down to the 1 hour, this is looking like it's trying to have a bullish attempt. But this is going to kind of be contingent on what the market does. This is bullish into bearish into bullish. It's looking relatively neutral, but we are having the momentum indicators agreeing blue signal. Now, what we're going to do here really quick is we're going to do these giveaways. So let's do the giveaways. Let me switch over to BitLab Academy. If you have not yet, do it right now. Come over to BitLab, the YouTube, at Academy BitLab. The link, you can see it several times. I'll post it in there right now as well. Retweet this link. Retweet this, follow us, retweet, and hit the like button. And what I'm doing right now is I'm connecting this to my coin picker. Now we need to pick the day. So let's go ahead and spin. What day is it going to be? Let's see what day it is. Oh, we're getting the Friday. Awesome. So everybody that's on today, baby. All right, now let's go ahead and come back to this tweet. Let's copy it. Copy this tweet. Now come over to the comment picker. I need to link the account. This is for 1 month indicators and courses. Authorized app. We're doing this together, baby. Hit that like button, hit that subscribe button, ding that bell, hit those emoji hearts and party things. Let's get those just flying right now. Let's drive that engagement. I appreciate each and every one of you. I hope you all are having a wonderful day, and I hope you have a wonderful weekend. You should like the tweet. Okay, now get info. Now this is the 1 month indicators and alrighty. So I'll be sending you a message. And last week's, by the way, the reason I haven't set yours yet is because we had some issues on the back end of our site. I'll be taking care of, I forget their name, but we haven't saved the person from last week. You won 1 month of indicators and courses. Now we have one more winner that we're going to be doing. And that is actually 4 winners from the, where's it at? Here we are. This is for the from the newsletter. We're drawing 4 names from the newsletter that you sign up from on the website. The pop-up that comes in, you get not only the newsletter, but you get entered to win. We didn't do the last 4, so let's go ahead and draw. Can I draw 4 names? Let me see. Number of winners, 4. Okay, show. Okay, now start. And I have it like this, so I have it cut off like this, so you can't see the full email addresses. So people don't get their stuff hacked. Okay, now I got this. We got Dig Dug, Jay Rosa, Val Trent, and Rogue Retirement. Rogue Retirement. I'll be emailing you all. Y'all got a free month of the courses. And so shout out to everybody. If you haven't yet, come over to bitlabacademy.com. This is not it, sorry. bitlabacademy.com right here. Check out everything here. Get involved. If you have any questions, come up to the FAQ. Most of the questions that I've been getting in the email, which there is a contact us page on the bottom of this, I beg you to save us both time and energy. You can come here and find out a lot of the information on how to do the different stuff. If you have questions on indicators, if you have questions on, if you have anything, most of the stuff in here is answered, and you can get this all answered on the FAQ page. And just hit that enroll now up here at the top. Use give me 30 at checkout for 30% off. And we also do have an all-in package for both the indicators and the courses that basically reduces the total price. So you get a bit of a savings there. I'll be sending out info on that soon. And with that, I hope you all have a wonderful day. Bring me a higher low. Hit that like button, everybody. And adios, muchachos.